Our first guest is one of Wall Street's best-known technical analysts. He famously warned investors to avoid stocks in 2007 before the crisis. And now he says the Dow could advance 23% by next June. Ralph Acampora is a partner with Altaira Wealth Management. He joins us now on set. Ralph, thanks for spending some time with us today, coming to the office.
Hi, Matt.
Let's, the economic outlook isn't fantastic. There are problems in Europe. Some people warning of a property bubble in China. Why would the Dow rise 23% between now and next June?
Well, full disclosure, I was very, very negative in May, June, and early July, and then had similar problems. And in fact, we were worried about the growth of China at that point. And all of a sudden, the market goes up in the face of bad news and stays that way throughout July, August, and into September. And I've been in the business a long time, Matt. And, you know, when bad news can't take you down, that's good news. And I keep telling everybody, tell me something I don't know or haven't heard about. And tell me something shocking.
You think everything's priced in here?
I won't say it's all baked in. We're going to have sudden pullbacks and things like that. But I think the majority of it is baked in.
You know, I'm just coming from this Bloomberg Dealmaker Summit, Ralph, and it's a lot of people in the M&A world, private equity world, some bankers, and saying that, you know, there's still a lot of bad news to come. And everybody was, for the most part, it seems somewhat subdued about the economic outlook, talking about that eventually some of those bad mortgages are still going to have to be written off the bank's balance sheets. That has yet to play out. So for me, I find it hard to find any optimism out there. Yeah,
well, that's just the point. There is no optimism. Very, very, very few people.
But for good reason, don't you think?
Yes, yes. But if you tell me those problems are going to happen, they're immediate problems, then I think the market has a problem. You know, if you're telling me about real estate and there's another shoe to drop, most people think that that's next year. And then people worry about inflation. That's out in the future. I'm not saying we go straight up from here, and I'm not saying we don't have problems, but I think we've seen a lot of the bad stuff for a while. And then the head fake is that, you know, if something happens with the election and Wall Street feels that it's a pretty good deal, taxes are not a big concern. At some point, corporate America feels a little bit better. A lot of cash out there. They could feel another move up.
You point out also that IBM is getting close to an all-time high here, and that you wouldn't see this kind of strength in a stock like IBM in a full bearish market.
Yeah, and I made a comment to someone about that just the other day. I was saying, you know, I've been in the business a long time, and this stock is about 5 points away from making an all-time new high, not a new yearly high, an all-time new high. In fact, there are a couple of Dow stocks that are already doing that, McDonald's being one of them. And I've never seen a major bear market with IBM at all-time new highs. So give me a few points, and I think I'm going to feel a lot better. Those are the big leaders. And by the way, they benefit from a weaker dollar. Those are the corporate clients that have the money. I think they could make things look a little bit better.